Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Eric Hadik, president of InsideTrack.com. He's speaking to us from the Chicago area. Welcome back to the show, Eric.
Oh, thanks for having me back, Jim.
Are people in the U.S. just as nervous as they are in the Canadian business world about what kind of a business future we're going to have under President Trump?
Oh, yeah. You can't pick up a paper or turn on the television without seeing different manifestations of that anxiety and that uncertainty. And I think that's what it is as much as anything. It's the uncertainty. And, just like with the markets, the stock market would rather have clearly defined bad news that it can digest and then start looking ahead from, rather than uncertainty that it just doesn't know how to distill and digest.
So what does this do to people who are trying to plan, say, business expansions or trying to keep what they have functioning smoothly?
Well, and that's what I'm talking about, is that uncertainty. And when I think the last month and a half, 2 months since the election, if there's one thing that has become apparent, become clear to political pundits and the everyday citizen, it's that whatever the incoming president says, he probably doesn't mean. And, you look at everything said and promised and threatened during the entire campaign, and then within 24 to 48 hours of winning the election, was already starting to go back on a lot of that. And then you even hear his advocates, his followers and associates explaining to you that he's a master strategist and that everything is deal making. And when you begin to look at it from that perspective, it's like anyone going in and starting a negotiation. You start with something extreme to your benefit, and then wait for the counter, and they'll start at the extreme of theirs, and that's just the firing the first shot. It's like, okay, now we have started the negotiating, and by the time you get done, you're somewhere near the middle, but the two starting points aren't even recognizable. Sometimes they're not even viewable. They're so far off in the distance. So everything that's said, even the pre-inauguration threats against China, against Russia, against whomever, you have to kind of take them from the same perspective. If that's what all of his constituents and his advisors are saying, that everything's a deal-making process with him, then okay. Then everything he says, you have to assume this is nothing even close to what he actually hopes to achieve.
And, of course, you have the rest of the world, which is trying to function and make their plans. Internationally, of course, people are just sitting there chewing their fingernails.
Yeah, and it is interesting because, when you look at things like the stock market and related investments, over the last couple of years, it's been the international markets, China in mid-2015 to early 2016, Europe both before and particularly after that, that those equity markets have been what has led the sell-offs and the quick sudden downdrafts. So it wouldn't be surprising to see another round of that on international anxiety and uncertainty, just not knowing how to plan for the coming weeks, months, or years. And so, certain aspirations that were originally factored in and certain hopes for different industries and arenas in the market, suddenly that becomes uncertain. And so what do investors do when there's that much uncertainty? They start to unload stocks. So it wouldn't surprise me at all to see, once Trump is in office, and if there are some actions that actually do back up some of the words and threats, you may see a quick downdraft in specific markets.
Now, Trump has promised a tax holiday for companies that have fled overseas. If they just come back home, we won't tax you to death. And, of course, we expect you to take those savings and, start new factories, hire more people. But back when President Bush did that, what the companies did was, with the extra savings from the lower taxes when they came back, they just bought more of their own stock. They didn't open new factories or hire more people.
It's like a lot of the well-intended government policies that, whether it's a cash for clunkers or rebated taxes back in the early 2000s to try and stimulate the economy. If you can't control where that money and where those incentives are going to be applied, then you're really going on just a wish and a prayer. And like you said, maybe this time it would be something a little bit different, but most likely it's not going to be what all those savvy strategists had hoped for and had thought was the only possible outcome of this new policy. And when in fact there's, a dozen or 100 different possibilities.
With this uncertainty, are you surprised that gold hasn't gone up more than it has?
Not really, because there's a lot of factors influencing gold, and also a lot of the markets anticipate things in advance. So, when you had gold and silver holding up into the third quarter of last year, there were certain things anticipated by that, and we were already deeply into the election season here and a lot of uncertainty. But it's also dollar related, and it's funny because if you look at something like over the last couple of months, you look at something like Bitcoin, that's had a completely different reaction than gold has. And Bitcoin just in the last couple of weeks made it back up to multi-year highs before it has sold off a little bit in the last week or two. But that may become the new gauge or measurement of anxiety and investment uncertainty.
Well, Vancouver does have a Bitcoin ATM.
Yeah, and I know that also some of the move into Bitcoin was fueled by other factors. They talk about Venezuela feeding into that and other global and geopolitical factors, but I think that it definitely reflects some of that anxiety more than gold. And I think there's going to come a time in the next couple of years where gold starts to react more to stuff like that. But it's all a function, too, of where you are in a trend, of what correlative factors are either enhancing that or deterring it. And as long as you've got a stable and strong currency out there, that being the dollar, gold often has a roof over it, a ceiling over it. It's when one of those fiat currencies, and it doesn't have to be the dollar, but when one of them is into a panic state, that's when you often get gold responding favorably. And like I just innuendoed there's been times when the dollar was really in a free fall, and there's been times when the euro has been in a free fall. In both cases, you saw at least a temporary surge into gold as a safe haven. So it's as much a haven for when there's a full-blown fiat currency crisis. And right now there's relative stability in the currency markets, even as the euro has headed back down to its multi-year lows and is bouncing there. When you see the euro get down below 104 and potentially start to accelerate a little bit lower, then you could see the type of global angst that drives some money into gold.
Do you see the euro and the U.S. dollar being at par?
I do think that we could get to that point. I've got some secondary targets, downside targets in the euro that could even see it getting below that. And there's certain trigger points that I'm waiting to see, but I do think that's a strong possibility. But there's also a timing and a cyclic factor to that I've been watching just as closely, and it involves a time frame coming into play around April of this year, where if the dollar has entered another rally and is broken out to new highs, that's getting into the time frame where I think we could see a more significant top in the dollar.
We'll have more with Eric Hadik right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Eric Hadik. Eric, what's your outlook on oil?
Oil, I am still using the same outlook that I described since early 2016. That is when multi-year cycles had bottomed. Oil completed the projected declines that had been published since mid-2014. And from there, I expected to see a 1 to 2 year bottoming phase where you would have a ceiling probably around $60 a barrel and a floor around $30. And I think that there's still a good chance that we stay confined in that range for the first half of 2017. I do think that there's a decent chance that at least some of the oil markets could see another rally into mid to late February, but then that becomes the time for a more significant peak within that trading range. So I'm looking for more volatile congestion going out, at least through the first half of this year. But that's another thing tied into that dollar scenario, that if we do see a major top start to take hold in the dollar during the second quarter of this year, and once that becomes more apparent and the dollar starts to enter a little bit more convincing decline later this year, that would remove a big impediment for crude heading higher and would start to open up the potential for that range to start expanding to the upside.
People envision a time when electric cars will pass gasoline-powered cars in sales. But right now, I don't see anybody rushing out to buy electrics right now, especially when places like Ontario have such high electricity rates that some people are paying more for power than they are for their mortgage.
Yeah, and like any major technological, not just advance, but shift, and a major shift where there are huge lobbies and industries that are going to fight to the death to keep their, even if it's obsolete and outdated, industry alive. There's a lot more to consider than just whether one is theoretically better than the other. And, you know, the mess of reality always pollutes that the sterility of theory. And so, you know, I agree with you that don't see it anytime soon, and there's going to have to be a lot of big compromises along the way. So, you know, at this point, it's just more of a theoretical debate.
And of course, you can say, I have an electric car, I don't pollute as much. But what about when your batteries burn out in 10 years? What happens with them?
Well, and that makes me think of the great innovation of CFLs that we got here a decade or more ago. And, you know, everyone get rid of your incandescent light bulbs, and we're not going to use them anymore. This is the do-all and end-all CFLs. And by the way, if you drop one and break it, you need to get a hazmat team out there, and we'll also send the EPA afterwards to make sure it was a proper cleanup. And we have to recycle it, but to recycle it, you have to drive it to a specific location and only recycle it there. That's all theoretically wonderful. Then there's reality. How many people are going to take that old CFL and just throw it in the trash, and it's going to end up in the landfills? And, you know, when they first started talking about it and giving those warnings, I had those conversations with people. It's like, really? Is this really something they believe they're going to shift people's habits that dramatically? And, you know, less than a decade later, all of a sudden, it's kind of pushing the CFLs to the background, and you probably won't hear the numbers of just how many of them ended up in the landfills and polluting the groundwater and everything else. Like you said, you get a lot of factors that people don't consider, and unless there's already something in place to be recycling and reusing an influx of something like that, then you're just kicking the can down the road and creating sometimes a bigger problem down the line.
Eric, thank you so much for chatting with us.
Thanks for having me back, Jim.
My guest has been Eric Hadik, president of InsideTrack.com. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.